Well, things are recovering after a dramatic fall on the Australian stock market today in response to Donald Trump's tariffs. Now, the market lost more than $160 billion of value at one point in time. Joining me live is UNSW Professor of Economics, Richard Holden. Good afternoon, Richard. Thanks for joining us. I mean, the market is beginning to fight back here. What's your reaction to what's happened today?
It obviously looks bad, but it was totally expected. This is really reflecting what happened on US markets over our weekend. So this is not a surprise. It reflects the fact that Donald Trump's new tariffs that he announced last week are creating a great deal of uncertainty, hurting equity markets and hurting the global economy. But this is really just the news from late last week washing through.
Richard, you say there that, it's no surprise, but did you expect it to go this far, for it to be this aggressive?
I think once the president made clear what the magnitude of the tariffs that he was imposing were, it was always going to cause an enormous amount of dislocation. Maybe that will be resolved in coming weeks and months, and maybe markets will bounce back. But it's hard to overstate what a huge upending of the global trading system has occurred in the last week. And so there was always going to be a very big reaction from markets.
I mean, it's a pretty dark shadow over the global economy. We heard those words from our Treasurer, Jim Chalmers, but we heard from him last hour also saying that Australia is in good stead to be able to deal with this volatility. Do you agree with that?
In some sense, I do. I think the direct impact on Australia is likely to be relatively modest. Our exporters are hit by a 10% tariff for goods sold into the US. The US accounts for about 5% of our exports. It's really the indirect effects that are what I think are most concerning for Australia. So China's about to become a whole lot poorer, and they're obviously a very, very large purchaser of our exports, and that will hit us across the board as well as from other countries. So, we're better placed than some countries are, but I don't think we should be complacent about the magnitude of what's going on here.
Well, let's talk about this US-China sort of tit for tat, I guess you could say. I mean, if China's economy begins to slow down, which it's looking that way, what exactly does that mean for us? I mean, here in Australia, we obviously rely heavily on China having the money to spend and buy our products.
Yeah, well, anything that makes China poorer, and this will make China and Chinese consumers poorer, is bad news for us. It'll make them less inclined to purchase our exports, whether they're energy exports or things like beef and lobsters and wine and those kinds of things, and education exports as well. So that is bad news. I think there are two things to bear in mind, though. China is not going to just sit by and allow their economy to slide into recession without doing anything. So we should look for what happened in 2008 or 2009 and see some kind of fiscal stimulus perhaps from China, and that might offset those effects and cushion the blow a little bit. And we've already seen our exchange rate falling, and that acts as a kind of shock absorber, making our exports more competitive. So it's not all bad news. There are sort of shock absorbers and offsetting factors, but what happens to China is going to be crucial for what happens to the Australian economy.
Yeah, indeed. I mean, what does this mean, and the global sell-off, I guess, for the RBA and interest rates here? Treasurer Jim Chalmers there was talking a little bit about that. What's your take on that?
It puts the RBA in a tricky position, to be honest. All else equal, a shock like this would probably make them more inclined to cut interest rates because of the effect on the Australian economy of this trade disruption. On the other hand, inflation is still not back to where they want it to be. Underlying inflation is really 3.3%. The RBA is targeting 2.5%. And the fact that we haven't got inflation under control, and Treasury forecasts coming out today suggest this could even place upward pressure on inflation, puts them in a tricky spot. You don't want to be cutting rates at a time when you still don't have inflation where you want it to be. So I think the RBA has some tricky decisions coming up at their next meeting or two.
Richard, we do have to wrap things up, but I mean, we know Trump loves tariffs. He said that, and he wants to put America first. Do you think it's going to work?
Well, no, is the short answer. This is going to make American consumers poorer. It is not going to be good for American businesses or American consumers, and it could lead to this kind of retaliation. Now, if what Donald Trump wants to do is effectively put in a backdoor national sales tax, which is in a sense what this is, so he can extend his personal income tax cuts and maybe make further income tax cuts, then maybe this is a crafty way to do it. But for your average American, that's a very bad trade. That's a very bad deal. And so I don't think this is going to be good for Americans at all.
Okay, Richard Holden, we'll leave things there for today. Thank you so much. We're expecting more volatility tomorrow, of course. Thanks for your time this afternoon.